The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 14th marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, what I call the 9 rules of the universe. You know, it's the universe that's always communicating to us. Rule number 1, it says, if you don't move, I won't move. Or said another way, if you sow, you can reap. But, folks, you first must sow. Rule number 2 says, unless you change what you are, you will always have what you've got. Now that, folks, that is one to make sure you pass down to your kids out there. And sometimes it's a good lesson for each of us as well. Rule number 3, the way you do anything is absolutely the way you do everything. Rule number 4, leaders are readers. What was the last book you read, and when did you last read that book? It isn't what the books cost. It's what it will cost if you don't read it. Rule number 5 says, don't say, if I could, I would. Say, if I can, I will. Rule number 6, wherever you are, be there. I covered this during the first hour. On your way to work this morning, concentrate on work, not on home. And then on the way home from work tonight, concentrate on home, not on work. Rule number 7, don't set your goals too low. Because guess what? If you don't need much, you can't become much. Rule number 8, happiness, it's not something you postpone for the future. It's something you design for the present, right here, right now. And finally, rule number 9 out there, time. It's our most valuable asset. Yet many tend to waste it, kill it, and spend it rather than invest it. Thank you for investing your time with me. Respect the rules of the universe because they will respect you. Let's go check out these markets out here right now. We've got the Dow. It's trading up 85 points, trading out at 1611. S&P up 12 points, trading at 1827. 50, composite up 25 points, really leading the charge out there. What do you think about that? The composite up 25, trading out at 4,025. Russell 2,000 up 7.5 points right now, trading out at 1189. Lead the charge. The upside is Priceline. Stepping into the fray, up $14 and change. Edwards Life Sciences up 14%, trading up $10. Google's up 6, WebMD up 6, Aspen Insurance Company up $6, Biogen BIIB up $5, F5 Networks up 5, Goodrich Petroleum up $4.68, Amazon up $4 and change. Diego PLC getting in the fray here. It's up $4. To the downside, a little brain salad surgery, Intuitive Surgical ISRG, trading down $5.85. We'll check in on that chart because I believe it's got a island reversal. And I can't recall if it's Intuitive Surgical. In any event, we'll go take a look at it. Antero Resources, AR, is its ticker symbol, off 5% this morning. Intercept Pharmaceuticals down $2. ICPT is its ticker symbol. Kiwi PLC off $2 and change. 3D Systems, Triple D, off $1.80. Endurance Specialty, ENH, off 3% this morning. Our call-in number is 877-927-6648. Let's go check out the indexes. Let's see what we've got going on here. Let's take a look at the S&P 500 first. I think that's what pops up on my screen. Yeah, most certainly. So we're kind of, price-wise, we're kind of in between floors out here. What do I mean by floors? Well, if we take a look at the retracement off of the low here, February the 5th to the high. That low, by the way, 1737.92, and the high out here that was put in on April the 4th, 1897.28. Your 0.382 retracement level. That comes in at 1836. You're traded at 1826 right now. We broke through that area on Friday. That's going to be our first little test area. That on the cash index, right around the 1840, I think is probably a good number. If it can, that's going to be the first test. If it can break back inside 1840, that's the number Steve-O's going to give it. Then what we're going to see here is we should see some type of retracement, some type of, well, we'll call it right now the potential B to a C of a much larger A to B equals C to the downside. The likely spot, if the S&P cash can get above 1840, the likely spot is going to be 1865. But let's face it, if it gets to 1865, it might as well go climb Mount Everest. And Mount Everest, in this case here, would be that huge downdraft from Thursday when price really tumbled, and that would be at about 1872. So I have to say, on a bounce, first objective, first target, 1846. Second target is 1865 on the cash, and I'd say if it can get to 1865, it may as well go test at 1872 range, and that could set up the A to B equals CD to the downside, the large one. You might say, hey, well, what does that actually look like? Well, we can go draw that in on our charts out here. We'll take the A point being the high from April 4th, the B point being the low from Friday, 1814 out here, and we'll use it as our C point. We'll go ahead and use the top of that Thursday session. 1-to-1 would take you to about the 1789. I suspect it would be about a 1 to 1.272, though. Take you to 1767. That would be a nice little Gartley buy pattern that would take us into around the lows from February 4th, February 5th out there. That's what's going on inside the S&P 500. Still on a longer-term basis, the long-term uptrend is still in place out here. You know, we saw some damage on Thursday. Well, certainly a lot of damage on Thursday, some damage on Friday. That's what's going on there. We take a look at let's look at the SOX index, because that has been strength out here. It looks a lot like the S&P 500 now, doesn't it? This too is trying to, right now it's trading below the 0.382 retracement level. That tells you just how strong the semiconductor index has been out here. It's trading at 564, 567 is your 0.382 retracement. And on Friday here, it actually did break a swing point. That was the swing point from March the 13th. That was at 562 out here. The SOX index bounce, if this is to be a bounce that we have here for a few days or so, that'll take it to 575, most likely 585. Really the same setup that we were looking at inside the S&P 500. So probably its next target is really 588, if in fact this can get some legs in it. And we'll see, because, what we have seen here is we've seen all rallies being sold. We are now 45 minutes into the trading session here, and, a little caution by the bulls, but we haven't really seen any kind of bear thunder out there. So that, that's a pretty good indication of a potential bounce. Let's look at the NDX 100 here right now. The NDX 100. This has traded all the way now down into the February 5th time frame. If we take a look at trend lines, this trend here coming back to June of 2013, it broke through that area with a wide range bar on April the 4th. That trend line would be the first level that I would be paying attention to on any kind of bounce. Well, that happens to get us up to the price point of April the 10th, that high, 35.99.60 or so, and that's what I would expect. That would be one trend line. We can take a look at another trend slash channel line out here. Let me just draw it this way. Let's see, come back about like that. Yeah, we'll draw it. We'll pay it forward here. So you can see kind of the intersection of where those two trends are. Let's go ahead and color that into, make that red as well out here. So now we've got these two red areas. That's kind of like the target area that I would be looking at. That would be a 4 or 5 day bounce out here. We'll see what, in fact, takes place. But that is the NDX 100, the target area for bounce about 35.99 in my opinion. Let's go take a look at the New York Stock Exchange. What is the New York Stock Exchange doing here? New York Stock Exchange has held up extremely well during last week's route to the downside out here. Let's see. Did it go ahead and complete an A to B equals CD down? The A point was the high from April 4th. The low, the B point was April 8th. It retraces up. Yeah, it made a 1-to-1 A to B equals CD, so it completed its objective. We're very close to it. 10,263 would have been the number. Where it actually got down to on Friday was 10,271. Yeah, on a $10,000 index, that will work for me. So it completed a 1-to-1, A to B equals CD, coming down into swing points from March the 3rd, swing point here from March the 14th out there. And we'll see if that continues to hold as support. What is it likely to bounce up to? Well, what the New York Stock Exchange has been trying to do is bust out its 2007 highs. 10,387 is the number. But I'd have to say a bounce really looks like a lot like the S&P 500 as well. You'd have to say the New York Stock Exchange would try to get up into the April 10th area, right around 10,554 or so out there. Dead cat bounce on the New York Stock Exchange, 10,423. 10,517 would be your 0.618 retracement area. Let me take a quick peek here. What do we got as far as net advancing issues today? Not too shabby, about a 3-1. Advancers leading decliners, net advancing issues right now at 14.48. In order for the bulls, though, to truly take control of the market inside the New York Stock Exchange, let me switch over to my spreadsheet. Let me see if I can find that number. It's a pretty good leap that it needs to take on it. It's in the 2,000 plus range is my recollection. Where is it? Come here. Where is it? There we go. It would be, I didn't update the chart. Well, I had that number in this morning's newsletter. So what I'll do here is during the next break, I'll go find that number. I'll go dig it out. Well, bear with me. Why don't I just give it to you right now? Give me a moment. Here's the daily. Okay. The number it would need would be, 2782. 2,000. Basically, you'd almost have to turn every issue as a net advancing issue out here. So I don't think today is anything more than a counter-trend rally, at least in the New York Stock Exchange. You get more than 2,782 net advancing issues. That changes the whole game out there. Let's look at, so we've looked at, what have we not looked at? The Dow. Let's go take a look at the Dow, see what it is doing. The Dow here has been very strong on this retracement. So the Dow, S&P, SOX index, all holding up pretty well. New York Stock Exchange holding up pretty well. Also, the Dow running into a support here from this nice bullish engulfing candle from March the 14th, March 17th out there. You can see that is, if I draw a line across the screen out here, that is the area of support. So where is it that the Dow can bounce to? The Dow, what we want to watch is what happens as it gets into the low of April the 4th, that high volume high out there. That would become its target. That would be at 16,392. 16,392, just a tad higher, takes you into the high from Thursday, which was 16,456, or right around there. So that is the range for a bounce inside of the Dow. If we take a look at the Dow here, still in a nice big uptrend out here. That trend has yet to have been dismantled whatsoever. Let me see. Is there anything else? No, we don't need the composite. We got the SOX. The XAU. Let's take a look at the XAU. Let's go see what it's doing. It's traded 94.22 out here, and the XAU is threatening an A to B equals CD to the downside out here. If we take a look at its bounce, the high of March 14th was 107.39. The low was put in here on March 27th out at $90. Even Steven. And if we take a look at that retracement that we've seen here over a period of 2 weeks, or 2, 4, 6, 8, 10, yes, 2 weeks. In 2 weeks' time is where the XAU made a dead cat bounce. That, folks, that is not that's not strength. That is weakness out there. We're looking at our markets here, possibly making a dead cat bounce in a trading session, right? So the XAU, which traded a little bit, it's trading up this morning here, but this is threatening an A to B equals CD to the downside. And if that is what takes place, that's going to be a doozy. That's going to be a doozy. That's going to take it back to December 31st for sure. Actually, in this case here, December 19th at about 79.66. Dow's up 83, S&P up 10. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 76. S&P is up 9. We're going to stop in and take a look at the 120-minute chart here. For the NASDAQ futures, the NQ, we can see the fight here between the bulls and the bears. They have marked their lines here. They did it early. Well, they did it last night as the market opened. We found if you're taking a look here at 8 o'clock last night, 120-minute chart that we're looking at, a nice little price relative strength divergence pattern out here on the 120-minute chart that formed. Now, when it formed at 8 o'clock last night, it formed a candle. It was a really, you want to take a look at trying to give you a confusing message of the markets. First, it gaps down, otherwise referred to as a falling window. Second, it forms a hammer candle. That is where you're hammering out a low. That says that the low that came in last night during that 2-hour session, which, by the way, that price point is 34.25.25. That's an important price area. And it was also a doji candle, a little bit of a message of confusion. So that says, hey, that candle session right there, maybe just kind of sit there and be patient and realize what is going on. Now, that is a pattern where you have price making a lower low, doing it on less relative strength out there. That's more bullish than it is bearish, but you're waiting for confirmation signals. Well, so that was your first potential confirmation signal. What we saw here during that session from 8 o'clock last night till 6 o'clock this morning was nothing more than a market that was really moving sideways. Then, between the session here of 6 and 8 o'clock, you got your little bull sash candle, ran right into resistance, this little red dotted line coming across our screen out here. And now what we're seeing is that when we came into that 10 o'clock session, the opposite of the hammer, something that would occur as prices moving up is a shooting star. So just as support or key level of support to be watching is the low from last night during that first 2-hour session. Again, that low, 34.25. You get a close below that. If you're long, you're wrong. Simple as that. In the case of a shooting star, I don't have the rhyme for the shooting star. We ought to create one. I don't want to waste your time here on the radio show doing that, but you're welcome to send me an email with that potential. But you have a shooting star, the exact opposite of the hammer candle. That says now resistance here, 34.72. So those are the key levels for us to be watching. Again, this is a 120-minute time frame chart. You get a close above 34.72. The next time period that we're looking at on a 2-hour chart is at 12 noon out here. So that means after Basil's show. After Basil's show, if in fact the NASDAQ is trading above 34.72, there's going to be your confirmation of a pretty decent bounce that will be underway. Does it have to happen by the end of Basil's show? No. It could happen during could happen during Daryl's show, could happen during David White's show. Likewise, the same thing with regard to the close below the hammer candle. So our lines have been drawn in the sand, at least with regard to I think to today's trading session out here. If it does nothing. If it does neither and it just trades sideways, well, then so be it out there. But those are the numbers. Those are the areas that we want to be paying attention to. And in my opinion, especially inside the NASDAQ, because it has led things up, it has now led things to the downside. And here's where the real message of the markets is going to come from. If I take a look at the ES Mini, we'll switch over to the ES Mini here. Again, it's 120-minute time frame chart. We're not going to see a price relative strength divergent pattern, but what we are going to see is that same shooting star. So that is helpful to understand. So inside the ES Mini, a close above 1824.75 on any 120-minute time frame chart will be very bullish. When I say very bullish on the 120-minute time frame out there, and that will set up a move higher retracement level out there. We take a look at the Dow. Let's go see what the candle signals were on the 120-minute chart here for the Dow. We'll pull that up on the screen. That'll take just a moment. It likely, and it did, also form a shooting star candle formation out here. Now, the Dow also yesterday at that 8 o'clock open formed both a hammer candle and a falling window, but it did follow up on that very next trading session with a nice bullish engulfing candle. That was signaling to us the hammering out of a low out here. That is an important area. 15,881 is the number inside of the Dow futures. A close below that, if you're long, you're wrong. And again, on the shooting star, a close above that 10 a.m. session high between 8 and 10 out here. And that level is 16,068. You get a close above that, and that says further prices to come to the north out there. So that cover. Let's go take a look at the Russell. See what candles actually formed inside of the Russell 2000 as well. Just the hammer candle, no shooting star, although very close to it. Looks like maybe it was off by a couple of ticks out there. So we'll go ahead. We'll give it the benefit of its brothers and sisters. That would be the high of 1121.90. That, too, would lead to a pretty decent bounce inside of the Russell 2000. Right now, we've got the Dow up 73. S&P is up 8. We get back from this breakout here. Let's go take a look at some of these stocks popping and dropping. To the downside, Intuitive Surgical. To the upside, Edwards Life Sciences. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 92. S&P is up 12. Let's go out to Fort Madison, Iowa. Tarman Ken. Ken, thanks for calling. Thanks for holding. How are you doing today?
I'm very good, thank you. It's good talking to you.
Good talking to you. Hey, tell us, how was the winter out there? How the crops, what's it like out there in your neck of the woods?
Oh, we had a terrible winter. I've never seen so many days below zero.
Really?
And it was up to in the 80s yesterday, and it's supposed to have a little snow tonight. So.
No, really?
I don't think it's going to snow, but it's supposed to get down into the 30s.
Oh my goodness, that's a lot of weather changes.
Yeah.
Now, so when would they normally start planting their crops out there? Is that now behind schedule?
Yeah, I think it is. Yeah. I think they're a little behind, and I don't know. It's awful dry right around here right now. We need rain. We need moisture, but it was a bad winter.
Well, sorry to hear about that. You want to take a look at ticker symbol BX, Blackstone Group?
Right.
Tell us what you're doing, how we can assist you.
Well, I've owned it for over a year, and I bought it at around $14.50.
Okay.
I sold half of it around $25, and I got stopped out on the rest of it last week. So.
Okay.
I just want another entry point if you think it's a good buy.
Okay, so let's take a look at the Blackstone Group. BX is a ticker symbol. Right now it's trading out at $30.05, down 9 pennies for the day. Let's look at it on a number of different time frames out here, number of different tools. Let's see if we get anything here where things kind of line up with each other. So what I've got on my screen here right now, as we take a look at Blackstone Group, it's the daily chart here. And Friday's candle formation was a hammer that had formed. So that says that the low from Friday out there is an important low, which is $28.65 out here. And, you know, that was kind of a relatively long-term signal box support level as well. So what's important here is that is the low of that hammer candle. So this may be a pretty decent support area for Blackstone Group. And breaking through that low would be very bearish because of that hammer candle, because it was a test of a swing point. Now, the swing point that it was testing on Friday was from January 27, 2014. Looks like there were 7.8 million shares on that trading session, and Friday's hammer candle came back with volume, came back with 10 million shares out there. So, you know, when you come back into a swing point with volume, that's always a dangerous thing. Let's switch over and take a look at, I'm going to switch to just some different charting tools out here. So we know we got a hammer out there. That's important. We'll take a look at also the daily and weekly on this to see what message we've got. Now, the daily chart, what this showed here, Ken, when you sold some at, I think you bought at $14.50. You sold some at $25 along the way. Right. When it was making a high on March the 12th out here, it was making a high on less relative strength, what I call a price relative strength divergent pattern out here, and that takes us to the trading session all the way back to January 14th of 2014 was when there was big, huge get-up and gusto, all kinds of buying pressure inside of the market. It made its highest relative strength peak right out there. And then price made a higher high, and it did it with less relative strength. Now, that's not necessarily so bad until the bears show up. And what took place on the trading session of March 12th was where it had not just a bearish engulfing candle, it also was a key reversal session there. And that very next trading session was important. And it was important because what it was doing, it was giving a what I call a second opinion and confirming that, okay, it was time to rest. Now, not just rest, the sellers have been in complete control ever since those two trading sessions really took place out here. And so even though we had a hammer candle that formed on Friday, it looks to me like this has some pretty good resistance at about the 31.54 cent mark. And it really needs to be able to clear that level before I would say it would give you any kind of a real buying signal out there. If you were a real risk taker, you know, you could take a trade now and you would want to go ahead and close out the trade if it were to close below Friday's session, that hammer candle out here. But knowing that, and what's interesting here as I pull this back, Ken, is there's another hammer candle out here. So this is kind of cool with regard to potential support. The trading session of January 25th was also a hammer candle session, and it was that low. So that's kind of interesting. It was that low, which was a price point of $29.83 that actually held as support even on Friday with another hammer out there. So, and when those hammer candles form, they're really important. They're really important single-day messages with regard to a stock. But this has significant resistance, sellers that are still in here at that 31.55 level. And so you bought this at $14.50. So it seems like you're taking a look at more longer-term trades on this, or?
Anyway, yeah. I trade both ways, you know.
Yeah. Let me switch this just to a weekly chart for us. Let's see if is there any. Let me see what the message here on the weekly time frame is as well. So the weekly time frame would actually say to me, if this thing can clear, you know, do you mind buying things that confirm themselves at higher prices?
No.
Okay. So what this thing actually needs to do to confirm its next buy point would be to close above 32.71 on a weekly time frame out here. You know, on the weekly time frame, this too also had a price relative strength divergent pattern. And right now it's kind of on the weekly chart, it's in that caution zone. So the message of the daily chart is that, hey, sellers still have control, but the bulls have truly stepped in at this stage. So the bulls are really trying to defend their territory. So, you could try a small position if you wanted to. Okay. You could wait for additional proof and wait for it to get above resistance out here. Let me put this on a monthly time frame as long as we're doing this. Let's see what the message. So the message of the monthly time frame out here is that it really needs to get above last month's high out there. Right now you're getting a bearish engulfing candle. This is not seeing a bearish reversal signal. Last time it saw one, Ken, was back in April in 2012 out there. So 2742 might be on a monthly chart, might be about your net, your best buy area. But boy, you can't let this thing close below those daily hammers out there.
Yeah,
that just spells trouble. Does that help, or tell me what you're looking at? Then maybe we can go look at that together and see if there's anything else.
What I was looking at to buy at?
Yeah.
28.
28. So at around 28, okay, well, 28 would be good because now you'd be testing the low of that hammer candle. So at $28, so I like that, okay. Well, let me see here. The low of that hammer is $28.65. If it gets to $28, that could be a dangerous thing.
Okay.
The signal of a hammer candle, if it breaks through there, what it's likely to do then, it's likely to really pull back into this cluster of swing points back in November in 2013. And then I think you're down maybe around the 25 area, 25.60 or so.
Okay.
So I would have to say, if you're looking to step in and you were to play in 3 to 8 sessions, if Baxter can, if this can pull back and somewhere between 28.65 and maybe 29.65 or something like that, you could step into a small position, and if it closes below 28.65, just exit. Take a small loss and wait for the next type of signal out there.
Okay. All right.
Alrighty.
Thank you so much. If you have time, take a look at BKCC.
Well, let's look at that. What is BKCC?
It's a small bank.
Small bank. Okay. Are you in this one, or are you looking to get in?
I have owned it, but I got stopped out of that some time ago.
Yeah. Now this thing here, this thing is really just kind of traveling sideways out here. Let me look at a little longer term time frame. Are you looking for? Is this out in your neck of the woods or the bank?
Yeah.
It is. Okay. Really just kind of a consolidation pattern out here. So if you're looking for an entry point into this, it's probably going to be down in the area of about $8.91. It's trading at $9.12 right now. Okay. Let me switch over, see if there's any kind of what the volume bars look like on this. Give me a second here. So is it BKCC?
Right.
BKCC. Let me see where there's volume hanging out and lurking on this chart out here. Well, here's your high volume bar, and you're trading below it right now. Okay, so I don't like that. This had okay, and here's so your potential entry point on this is going to be the swing point from June 24, 2013. There's your 896 level, and if it can test 896 on less than a million shares, that might be a buy point out here. But I don't like the trend of this. Take a look at this trend. It's right now making lower highs and sort of making lower lows out here. So it looks like it's really in a descending price channel out here, and you'd have to say you'd want to see it really kind of break through that area to give you some type of a buy. So that's how I would also take a look at BKCC. Let it break its current descending price channel before you would probably step into this.
Okay, very good. The reason I really like it is because it's got my initials and it's got my wife's initials, so I figure it could be a good buy.
Okay, well, there's no arguing with that. So but I wouldn't go all in. I wouldn't back up the truck just yet.
Okay, I won't do that.
All right, but I'm pulling for you when you do pull the trigger out there.
All right, thank you so much.
Thanks so much. That was Ken in Fort Madison, Iowa. And you got to like that style of trading out there. You can find something that. I was playing golf with my son on Saturday, and great day of golf. Great weekend for golf out there, and we play with just two other guys, just kind of a random thing. We just kind of went out and in a different course that we were playing at, and they had and we're really celebrating his birthday, which is in a couple of days, or tomorrow, in fact, and we played the back set of tees out there, and just in front of the whites there was a set of tees, and they were marked with the initials SR. So I know exactly how Ken is feeling about initials in a stock, because I was really pleading with my son. It looks to me like I'm supposed to be playing from those tees that are marked for me, Steve Rhodes. I mean, how many other tee boxes are marked like that? And of course, he said, no, not a chance, Dad. Not a chance. In any event, let's continue taking a look at the markets out here. Enough of this banter. Let's see what we've got going on. Let's take a look at, so the Dow is up 105 now. S&P is up 14. Let's take a look at some stocks. I did say there were some stocks that were moving in the market that we wanted to look at. One of those was, let me just switch this over here. It's going to be a little bit easier for me to pay attention to. One was Intuitive Surgical. Now, Intuitive Surgical is down $4. Let's take a look at this. I think I've got this stock chart on the screen here. Intuitive Surgical did create that island reversal top formation out here. Now, Intuitive Surgical done a couple of things. One, it gapped up with big volume on April the 1st. 2.8 million shares. Traded for 5-6 sessions here, traded higher, pulled back a bit, and then gapped down on April the 9th out there with 2.6 million shares out here, and created this island, which is a nasty, now this is a real psycho stock, but that is a very bearish pattern out here. It's trading a bit lower here this morning, actually leading the charge dollar-wise, only down $5, but still a very bearish pattern out here. What the likely outcome of Intuitive Surgical, and let's put this on a weekly chart. Read a pretty good article this weekend on Intuitive Surgical, and just simply when you consider all the advances in medical technology and the precision of which these machines are able to assist doctors in surgery out there, it's really pretty cool, really pretty amazing, where medical technology is taking us to. So, the weekly chart on this doesn't really look too bad. It's got this volume down here that's trading at. It looks to me like what Intuitive Surgical wants to do is just come back out and test these lows again, and it might set up a pretty decent buyout here, just depending on the volume. So Intuitive Surgical right around the 357.02 mark. It's trading at 435 right now, and there's no reason for it to not come all the way back into that area. That may set up a decent buy. Even last week, it didn't have volume off of the highs. Even as it created that island reversal pattern, it was some volume moving down, but it really had volume moving to the upside out here. So Intuitive Surgical could be a decent buy at around the 375 level. And that's what's leading the charge to the downside. To the upside, we've got Biogen. We got Priceline leading the charge to the upside. But we've got Edwards Life Sciences. Let's take a look at that. And then we'll go take a look at the BIB. But EW is the ticker symbol. It's been a while since I've taken a look at Edwards Life Sciences. Looks like that was a mistake to not look at it. Let's take a look at it. Now, this thing has gapped up this morning. Okay, no. Okay. Edwards Life, now this was, you take a look at the IBD stocks. And, folks, if you do, IBD type stocks in a market that's breaking out, pretty cool. But don't overload yourself inside those momentum stocks. In fact, I think that we've got a special coming up this week. Maybe we've got Bill. What's his? Where's the brain contusion out there? You know what? I'll find out during the breakout here, and then I'll report back to you for our last segment. We've got the Dow is up 100 points. S&P is up 14. We'll be right back, folks. Bill O'Neill. Thank you, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 129, S&P is up 17, Composite's up 46, Russell 2000 is up 13, and as Bill O'Neill, sorry for that little brain fart out there, it's going to be this Thursday from 5 to 6. All the details are on the homepage of TFNN.com, and really all I was suggesting is that you do not load up on all of the IBD stocks out there. Make it just simply a portion of your portfolio out there, because when they fall out of bed, They fall out with a big, huge thump out there. Let's take a look at the markets here. Let's try to wrap up today's session, at least wrap up this morning, and where we are at. We are long in the newsletter, by the way. We took a long position here in the markets this morning. Playing this bounce out here could be a very healthy bounce. Of course, what we're also really preparing for is the next move to the downside. So just a trade at the moment. Now we're paying attention here. We took a look at the where the bulls and the bears were hanging out inside of the market. And folks, if you have not test drove Mastering Probability, do yourself a favor. Go over to the homepage at TFNN.com. Go ahead and try it out right now. You can do it. It's unconditional 30-day money-back guarantee out there. I'll teach you about all these patterns that we take a look at, how to trade them, what we're doing, all kinds of education over there. And don't forget about our Tiger Dollar special out here. It does not run for that much longer. I don't know when the actual date is, but you want to go ahead and get those into your bank. Make 25% on that, and it's a nice way to do that. In any event, the key here, coming into noon after Basil's show, you get a close above that shooting star that took place at 10 o'clock out here. And, of course, no confirmation of that shooting star to the downside. That high is 34.72. You're at 34.81. That is, we're just about to see a bullish crossover of some moving averages out here. That's in the NASDAQ. That's in the weak link out here, but it's leading the charge. That and the Russell are leading the charge to the upside in the market as we speak right now. So, if we take a look at what does that mean for us on a daily chart, daily reversals take place inside of the ES Mini. Let's take a look at that. And this is an important reversal or potential reversals. A close above the for open from Friday, 1829.50 says 1840 becomes its target out there. That doesn't mean that it can't move higher, but it's trading at 1826 right now. 1840 is a pretty reasonable move higher, and we'll take a look at volume. But it would set up a nice little bullish engulfing candle here this morning. Inside the NQ out here, what it needs to see is a close today. It's trading at 34.81. It just needs to see a close above 34.85 out there, and that would be a little bullish engulfing candle. Now, the bounce here inside of the NQ, if you just simply go from high to low, you're taking a look at the dead cat bounce. The 0.382 retracement takes you to 35.45. That's another about 60 points north out here in the market. That's nothing more than a little relief rally. That's nothing more than a 0.382 retracement. And, of course, if we take a look at the last three trading sessions out here from the high of Thursday out at 35.99 down to the low of last night, Sunday evening. 35.32 is your 0.618 retracement level out there. But you want to watch the bars as prices moving up into those levels. I suspect that's what we will see take place in the market out here. But you never know. These rallies here over the course of the last 2 weeks, especially in the NASDAQ, all rallies have been sold. So it's going to be an important closeout here to let us know if the bears have just simply run out of ammo for the time being, and they've just pulled back to a level maybe around the 35.45 or 35.99 before they open up again. So, folks, it is Marvelous Monday. Thanks for spending your morning with me. Stay tuned. Our man Basil Chapman is up next. After Basil, we've got Daryl Martin, David White, the Tom O'Brien Show from 4 to 6. Have a great Monday, folks. I look forward to seeing you bright and early tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.